Why I do not trust dividend screeners. Quick side note, I am not a financial advisor. This is for entertainment purposes only. It is for information and to show you data to help you make informed decisions on your own. So first up, on a dividend screening website, they have ICOI as number 1. They have it at a 168.73% return. Now, I don't know if they went by the current price and the dividends today or an average or what, but I'm going to go back in time and show you why that's not completely accurate. Had you bought this stock for $47.66, you would have been very happy with the dividends. It is less than it started out with. The stock's not even a year old. This and a lot of ETFs are down right now. When I last checked, there's over 200 ETFs that were performing well in 2024, and they are doing terrible in 2025. So if you feel like you made a bad investment, don't feel alone. A lot of people do, because a lot of stocks that were great last year are very sad this year. You guys get the point. The $9.24 dividend was awesome. But if the stock does continue to go down, it's definitely what I call a buy and let die. You buy it one time, you have high-paying dividends, you can invest in other stocks, and you end up not losing any money. But if you buy it at the wrong price, if you buy it at $65, you're not going to be happy right now. Can it recover? Anything's possible. Just be careful. Buy it when it's low. Don't be buying it high. Now, on to the next one. Next on their list is PLTY. And they have it at a return of 148.88% return. And this is another one, if you bought it, is my screen frozen? No, I clicked it. There we go. If you bought it, I think this was another one that's not even been around a year. Let's go back in time. Yeah, this stock hasn't even been around a full year. Almost, but not quite. If you bought it for $50, you'd be very happy right now. You can see $2 dividend. I don't think this one's had a dividend lower than $2. It's performing very, very good. If you bought it for $95, you would not be happy. If you bought this stock for $95 and then you watched it drop down to $60, you'd be mad. Especially when you can see it drop down to like $58. So again, this is why you look at the history of the stock to see if you're getting at a good price. $95 was a terrible price. You might have gotten a little bit excited when it went back up to $73, but then it dropped back down to $60 as of today. So just be careful, y'all. I mean, it went back up to $78. And like I said, the dividends have been doing good. But again, buy this stock when it's low. Do not buy it over $70 by any means. Only $60 today. Market might go down again. Market's been down in the past couple days for a lot of these ETFs. But yeah, always look at the history. Because remember, they had that one at 148.88% return, which technically, based on what you bought it at, you could agree. Next is a failure. They had SMCY at 139.49%, which is a bold-faced lie if you bought this stock when it first came out. And if you're like me and you bought this stock when it first came out, you'd be very, very, very disappointed. Just for complete honesty, I usually, when Yield Max or Roundhill comes out with a new weekly or monthly paying ETF, I usually buy at least one share to see how it's going to do. This one did terrible. We're almost at a year, and even with the dividends, you see that 55.05? You would have been very, very sad. If you bought this stock for $59.20, it's worth $15 now. Dividends weren't bad, but the dividends went down as the stock went down. See that drop? You did not make your money back in a year in this stock. That's devastating to see. If you bought the stock for $60, right now it's not even a third of its value. I mean, if you bought this stock for $50, it's not even a third of its value. Dividend keeps going down. A lot of people panic sold, crashed it down even more. I mean, that's rough. That's really rough. And then just for an honorable mention, one of my favorites last year, but one I gave up on kind of for this year, was MSTY. Actually, let me change this real quick. For those of you that don't know, I have an entire video on this stock because that's how much I love it. Because had you bought it in February of 2024, you would have made all your money back by November. I'm going to go back in time and show you guys. See, you could have bought this stock in February. You can go on Yahoo Finance, total everything up for yourself. This stock frequently, like every so many months, would hit like $45, as you saw there. Its dividends were high enough, you would have made all your money back by November. And it would continuously, it would bounce around between like 25 and 40. See, $46 again every so many months. It was fantastic. We were all really excited. I had so many people investing in this stock. I have an entire song called Limit Buy based on this stock. That's how much I loved it. And then, like a lot of ETFs right now. Part of the problem is Roundhill came out with a lot of weekly payers, and I'm going to show you what I'm talking about. But first, see how that's the stock. I mean, it was doing pretty okay until we get to more recently. By August, that's when you go, ouch. This is the lowest it's ever been, 1561. If you hear a growling noise, it's my stomach. But, yeah, that's really sad. But I'm going to show you MSTW real quick. So MSTW is Roundhill. It is brand new. It came in at $50, and it's only going down, which is really disappointing. Right now, as you can see, it's at $35.88. This stock, if you buy it today, it will pay you, I believe it's the 3rd. Let me show you real quick. As you can see, we're on MSTW, and its most recent dividend was 45 cents a share. If you buy it today, you will get that. But if you stayed this long, my bonus for you is, let's go down here. I'm going to show you something cool. So these are all Roundhill. I always call them the competition to Yield Max. All these ones that end in W, almost every single one of these will pay you every single week. The best performer was TSLW this week. Not every week, but this week. Let's go distribution. Scroll down. If you buy this stock today, again, disclaimer, it might drop by more than the dividend because market's not even open yet. I'm trying to do videos before market opens so you guys can do what's best for you, make informed decisions. But here you can see $1.27 if you buy this stock today and you get it for $33 or less. If it could continue to have a $1.27 per week return, you would make over 15 cents per every dollar invested, which is great. One of the best I've seen. But last week did not perform even a third as well. It was only 38 cents last week. Week before, 85 cents. Week before that, 58 cents. Has not been around a full year. These Roundhill ETFs that are weekly paying are leveraged, which means they are very, very high risk. When the stock it is based off of goes up, it'll be up times 3. When it's down, it's going to be down times 3. Very high risk. All these ETFs are not doing really good in 2025. It's very disappointing. They might do better in 2026. Keep in mind, there's been over 100,000 people that have lost jobs this year and been fired, quit, whatever their reason is. Economy's not doing great. When you really look at not just reports, but like what people are reporting about their own lives, how many people are being evicted, it's rough. So if you have any money to invest, consider that a blessing. Take this time to be grateful that you even have like 12 cents to your name, because a lot of people don't even have that. But yeah, this is your bonus. If you want to buy TSLW today, it is probably the best performing ETF that I've seen this week. But also keep in mind, last week did not perform as well. You guys get the point. Have a great day. Happy investing. Never go just buy a dividend screener. Always look at what the stock actually paid and how much value has your initial investment start. Because you don't want an SMCY that was a complete failure where you lost all that money. You guys get the point. Have a great day and happy investing.